Mortgage Rates Live with the Mortgage Calculator. We will wait just a few minutes to get started here. We have the comments up on the screen. Feel free to drop a comment there while we wait to go live on all of the different platforms and just give everybody a chance to tune in. Thank you for everybody being early and on time. And we'll get started in just a moment. Hope everyone's been having a great week so far. It's going to be interesting to check out the rates for today, and then we have a great topic to do our deep dive into today. Everybody just tuning in, feel free to drop a comment in the comment section in the chat there. Good morning to everyone there. And we'll get started in just 1 minute here. All right, good morning, everybody in the chat. Sonara, Ben, Arjun, Pearl, Mark, April. Shout out to everybody on the Mortgage Calculator team. All right, it looks like we are live on all the different platforms, so we are good to go. So we will take the chat off there and we will go ahead and get started. Welcome, everyone. My name is Kyle Hiersche. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hiersche, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. We do this show every weekday to go through the live mortgage rates on different programs, and then we do a deep dive into a different loan type every day. And today, our loan type that we're doing the deep dive into is asset utilization loans. Now, again, we specialize in non-QM loans here at the Mortgage Calculator, so this is a very familiar product to us here and our loan officers, so we will get into that here shortly. But before we do that, just like we do every morning, let's go ahead and pull up the live rates with our pricing tool and see what the market is doing. So, Nick, let's go ahead and pull up the rates and see what it looks like this morning.
All right, let me change my screen and we'll get started. So as Kyle mentioned, this is our pricing tool for our team of mortgage professionals. We have over 300 licensed loan officers for 22 states. We can do primary and second homes, and in 44 states, we can do our DSCR business purpose loans, which we love to do for investors as well. So if you'd like a full loan estimate with a full breakdown, please get with one of our team members. This pricing tool will show us the general rates and APRs for our general programs. It is May 9th, just after 11 a.m. Eastern, so most of our general programs are live. So let's set up a basic scenario and check out the rates today. We're going to set all of our demos here at a 400,000 loan amount. We're going to slide the LTV to 80% loan to value. That's 20% down payment. We're going to ask the computer to find the best rate at a 99 price. That means 1 discount point in buy down. Most of our customers are asking to buy down the rate a little bit, so this is the typical request. We're going to compare our conforming conventional programs. Then we'll check out our FHA rates. And then we'll go into our expanded guidelines, aka non-QM, where we have over 5,000 additional loan programs using alternative income. We also have VA available, but that is only for our eligible veterans. So if you are an eligible veteran, we appreciate your service and would be happy to quote it. But since not everybody is, we don't do that live. And same with USDA, that's only for properties in a USDA eligible area. So if you do happen to be shopping in those areas, let us know and we'd be happy to quote it. Let's start our first example with conforming conventional. Set up a purchase, 30-year fixed, primary occupancy, single family home, 1 unit, state of Florida, county Miami-Dade. And for all of our demos today, we'll set the estimated FICO score of 760 and the estimated debt to income ratio as 40%. So with these basic setups, let's go ahead and check out our rates this morning. Looks like rates went up a little bit from yesterday. So unfortunately, that does happen sometimes. Right now, the best rate this morning, 6.625 for 0.75 discount points and costs and an APR of 6.793 Remember yesterday we were about 6.6 something. So a little bit of an increase there. Hopefully we see some more downward movement later this week. Now, if for any reason our customer doesn't qualify for conventional, usually the next option that we want to look at using the same setup is our FHA program. So FHA allows a little more leniency on credit guidelines as well as a higher debt to income ratio we can use. But let's go ahead and keep everything else the same as our other demo so we can compare the APR from a conventional to an FHA loan in this scenario. So FHA, about the same as it was yesterday, it looks like. So at the top here, 5.75 rate for 1 discount point in cost, and a final APR of 6.352. So remember, we always use APR to compare across programs. So in this scenario, even though FHA does have a upfront mortgage insurance and yearly mortgage insurance, it actually is a little bit cheaper on the APR here than conventional. So for our buyers out there shopping right now, definitely recommend to compare conventional to FHA. And in this case, in this scenario, might actually be a little bit cheaper for some people. So definitely don't discount FHA with the recent updates. Now, if our customer doesn't qualify for conventional or FHA, many other banks or lenders don't have other programs. And that's where we love to come in with our expanded guidelines, aka non-QM, where we have over 5,000 additional loan programs using alternative income. So we'll set this up the exact same, but we selected expanded guidelines, and there's one new option that pops up, and that's our income option. So we can use, let me scroll down a little bit so it pops down. So we can use full doc is what we use for conventional and FHA. That is 2 years of tax returns. So typically we would choose a non-QM program here to use an alternative income, such as 1 year alt doc, 2 year alt doc. Those are general programs. We have asset related programs, business bank statement programs. We have our DSCR programs here that we'll go over in a minute for investments. We have personal bank statements, our most popular, and VOE, 1099 P&L, all these different options. But our most popular is personal bank statement 12 months. So that's what we do for our demo. And that's going to be for our self-employed borrowers. Many times our self-employed borrowers, when they submit 2 years of tax returns, have various write-offs and may not qualify at all or may not qualify for the home they want to purchase. And in this case, we're going to use 12 months of their bank statements, no tax returns. Simply use the cash in their bank statements to determine a debt to income ratio in this demo of 40% using their actual bank statements. So most of our self-employed borrowers can qualify for much more or qualify where they want to qualify at all. So these are great solutions. Rates are always a little bit higher on non-QM, but we love to provide solutions for our borrowers to get their home of their dreams. So let's check out our bank statement options this morning. Nice. It's a little bit different than it was yesterday. This program coming in at 7.124 rate for discount points of 1 discount point in cost and a final APR of 7.204. So we saw there the conventional was, I think it was 6.7 a minute ago. Here we're at a non-QM using bank statements for relatively just a little bit more cost. So we love when we can compare these programs, present our borrowers with 1, 2, 3 different options, and non-QM obviously sometimes is the correct option. So we love to present these for our borrowers. Please get with our team. These are complicated. There's a ton of different versions of these. So please get with our team to find which one of these bank statements, these hundreds of programs we have, will fit best for you. Some of these may allow things like a bankruptcy or foreclosure if there's other issues going on. So please get with our team and they'll find the best one for you there. Now, before we pass it over to Jose for a deeper dive into this, where we're going to do the asset-based ones, we're going to do our last live demos for investment properties. So we love to work with our investors, whether they're a first-time investor buying their first, maybe an Airbnb rental, a very popular request these days, or they're an investor with 5, 10 investment properties or more. We have some great options. So for our final 2 demos, we're going to do investment property. We're going to set this up to 80 LTV, just like we did before. And we're going to compare our conforming and our expanded guidelines. Remember, FHA, VA, USDA are not eligible for investment properties. So we're simply going to compare conforming and non-QM. So for conforming, we'll keep everything else the same as our prior demos. The only thing we changed here was the occupancy to an investment property. Now let's check out the conventional investment property rates this morning. So as we say every morning, remember investment properties do have additional costs here for conventional. So unfortunately, the computer can't find a 1 discount point option. Best combo the computer found, 7.125 rate for 3.5 discount points for a final APR of 7.385. So many of our investors would ask to have a higher rate option if we can lower the discount points. So fortunately with conventional, it's a little weird right now where even if we cruise down here to a higher rate option, here's a good one, 7.49 for 2.875 discount points and costs. Still investors would like a lower cost option. So that's where we love to present our non-QM options. So definitely recommend any investors out there compare both the conventional and our amazing non-QM options here under expanded guidelines. So when we do expanded guidelines for an investment property, we have a couple options that pop up. First, we have to choose income verification. And for an investment property, our most popular option by far is the DSCR program, debt service coverage ratio. And that's because it doesn't require any income or employment from the borrower. We're simply going to use the estimated rental income from the property that we're purchasing in this case to determine if it can cover the expenses for the mortgage that we're proposing in this case. So if the rents can cover the mortgage, taxes, insurance, all that good stuff, PITIA, the ratio is 1.00 or higher, aka the property cash flows. We also have options for DSCR ratios under 1.00 where the property doesn't quite cash flow. So tons of different options there for different DSCR ratios. For the demo today, I'll just leave this blank so we see all the options. And a final thing we have to select is prepayment penalty. This is standard on non-QM investment properties. The typical option is 3 years, so that's what we always use for a demo. We can choose 0, that will cost more and limit the amount of loan programs. We can also choose 5, that will cost less, but not as many investors allow 5 years. So 3 years is the most common, so this is going to give us the most options here. So now let's check out our DSCR rates this morning. So good option here at the top, 7.625 rate, 0.850 discount points and costs, so much lower cost there for our investors, and a final APR of 7.7 here. So great option, very comparable to conventional here for investment properties. Definitely recommend if you're buying an investment property, look at the DSCR program. You can also start multiple loans at the same time because there is no income or employment factor involved. So many of our investors will refinance a couple properties, current rental properties, to purchase a couple more rental properties. So great options here. And as you see, there's a ton of different DSCR options here as far as the ratio. There's different options for the prepayment penalties, and we need to make sure that we find the best program that fits for you. Some of these may allow short-term rental income and other things. So make sure you get with our team and they can navigate you through the hundreds of different options here to find the best one that fits. So now, before we get into Jose, let me introduce his topic real quick. Switch my screen. And for those of you that joined us before, you know today's topic is asset utilization loans. So you saw me go through the non-QM there. One of the options is asset related there. So these are going to be a deep dive into these loans. There are really particular requirements for each of them. So make sure that you get with one of our loan officers that can navigate you through the requirements of each. Every different program sometimes have a different way to calculate the way they're doing the asset utilization. So Jose's got a few examples here he's going to go over of the different ways we do it in general. But just as you saw there, we have dozens and dozens of different versions of each program. So please get with our loan officers to find which one works best for you, which ratios we need to use, and all that kind of good stuff. So a lot of different flavors of this program here. Jose's going to go through a couple demos, but there's a whole bunch more where that came from. So just want to set that up. But Jose, if you're ready, you can go ahead and take over.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Asset utilization is a very interesting topic. Usually is not the one that comes up first in the considerations of income types. It's one that is normally forgotten about, but is probably one of the easier ones to originate. It basically involves the use of liquid assets. So we're talking checking accounts, savings accounts, money market accounts, stocks, bonds, mutual funds, retirement accounts, 401ks, all liquid type assets. Obviously, the 401ks, retirement accounts are a little less liquid, so there will be an adjustment as to the percentage of the asset to be used. And obviously, if you're using retirement accounts, you also have to provide terms and conditions of the withdrawal to ensure that those assets could actually be liquidated to meet the requirements of the loan payment. So that is a critical component. Now, what is not acceptable would be assets like other real estate that's paid off, cars that are paid off, artwork, gold bullion sitting in a vault somewhere. That's not crypto. Also, those are not usable assets. The crypto is not going to be usable because it is usually not going to be based in a U.S. account with a full statement showing all of the transactions, beginning balance, ending balance. Crypto is usually sort of a gray area as far as that. So do not consider crypto for your asset utilization program. Now, asset utilization is not dependent on investment or primary or second home. So there is no occupancy consideration as far as can you originate the asset utilization loan. Obviously, the occupancy will come into play when sizing up the loan and seeing what are the loan to value parameters for primary and for investment, because obviously primary is going to have a higher LTV. So I have prepared multiple scenarios to share with you today. Our first scenario here is for an asset utilization primary purchase with 10% down payment, right? So this is the highest LTV, 90%. So that's an amazing option here. And you can see that our loan amount, $450. Our cost is 1.75 points, is the lowest cost option at a 9.5% interest rate. And you can buy it down all the way to 8.5% rate. That is with only 10% down for a primary 1-unit purchase. Our second example is a 15% down payment, also primary. And now you could see, whereas the 10% down payment was one of the very few limited options that we have for this program at a 90% LTV. At 85% LTV, we're more mainstream as far as the availability, right? A lot more options, more competition amongst the different investors for our business. Hence, you see very good rates. 8.124 has actually a lender credit of $531. And you can buy it all the way down to 6.874. Those are Fannie Mae rates there. And $425,000 loan. So it's a little bit over 2 points on this cost for your asset utilization option with 15% down. And I want to put a little bit more context here, right? Look at our asset utilization investment purchase now. Look at that, 20% down for an investment 1 unit, and you're getting 8.125 with a lender credit of $500. Wow. And you can buy that down all the way to 6.99%. And that is at 2.5 points at that cost for a $400,000 loan. So now we will show you some cash out refis. The first one is primary. 80% is the maximum LTV for the asset utilization cash out refi. 7.999 is the par rate. No additional cost for that rate. And you can buy it down all the way to 6.9 0.749. Wow. Also at a cost of 2.5 points. Again, that is our primary 80%. So investment asset utilization, investment cash out is maxed at 75% LTV, whereas our purchase is maxed at 80% for the investment. The refi is 75%. Oh, don't have my rates here. Sorry about that. And our primary purchase, 20% down payment. Now, this is for a 4 unit. I always like to throw in that twist. You will notice in this scenario with asset utilization, as it is a little riskier than bank statement, there is a little bit of an LTV adjustment when we use the 4 unit property as opposed to the 1 unit property. The 1 unit property, we had 90% was our limited option where we didn't have that many choices, a little bit of a higher rate, but it was available. 85% was the more mainstream option for the purchase. And then, as is usual, our 5% LTV reduction for a cash out. And this is again for our 4 unit. And our 4 unit investment purchase, 20%. Look at it right here. Again, also 8.125 with a $500 lender credit. 6.99 is the lowest rate option. So as you can see, very good options for asset utilization. If you have that borrower that does have substantial assets, then this is an amazing program. You do have to look at the guidelines, though, because all of the different investors that offer this program are going to have different formulas for calculating the income. They're going to divide it by a different factor.
All right, perfect. So I just want to discuss and just be clear. So this is a program that does not require income. You're saying, Jose, that if I have a lot of money in the bank,
Doesn't require employment.
doesn't require employment, doesn't require income. If I have a lot of money in the bank or a large 401k or large retirement, if I got $1 million somewhere, let's say, I can get this loan without having a job, without needing any income. That's what you're saying here?
Yeah, it brings an ear-to-ear smile to my face. And not only that, the best part, you do not have to pledge the assets anywhere. You don't have to tie them up. That's a really important component. There's no tie-in to your money. Your money, they verify that it's yours. You qualify for the loan, you close, and you're done with it, and do with your assets whatever you please.
Great program there.
And what are the calculations there, Jose? We didn't really go into that though, but some use 60, some use 84, some use conventional loans 240, right? So
you really have to dig deep into each guideline that you're considering and see what their calculation is, and see which is the one that's most advantageous to your borrower.
Exactly.
Because they are going to apply different overlays, like what percentage of the.
Hold on, we got a question. Hold on. Here's your question to go right into that. Do we need terms and conditions for withdrawal for mutual funds and stocks? And what haircut are they going to give you on those items? That's what you're going to go into.
Right. Yeah. You may get a haircut on stocks, mutual funds. You're definitely going to get a haircut, meaning an adjustment of your loan to value. People, for those of you who haven't heard that phrase before, you're definitely going to get a haircut for retirement accounts and 401ks, because common knowledge is that when you liquidate funds from those accounts, there are penalties for withdrawal, for early withdrawal. But as far as terms and conditions for withdrawal, you do not need them for stocks and mutual funds, because those are not restricted asset accounts. There may be a haircut, like you mentioned, Nick, but no restrictions. However, 401ks and other IRAs and other retirement type accounts that are restricted access accounts, those you definitely need terms and conditions for withdrawal to be able to use it.
And then remember, we don't have to use, if you're not closing with those funds, sometimes you don't need as much paperwork per se, as Jose said, because We're just verifying the funds, right? And we're going to apply the haircuts and whatnot to it. So you're thinking of, Nick, when you have to use funds to close, right? We have to know exactly how much funds we're going to get when we liquidate. So since we're not using funds to close, a little bit different. We're just verifying. We're not necessarily liquidating those, as Jose said. So a little bit different than probably what you're used to when you verify those types of accounts. Good question.
I don't see any other questions, so I guess we're good to go. But again, great loan program, not only primaries, but also investment properties, like Jose was saying, multiple units, and it's all with no job verification, no income verification, just based on the assets that you already have. So we can go ahead and wrap this up. If you would like to get with one of our loan officers to walk you through this program and others, go ahead and visit us at themortgagecalculator.com. We have over 300 loan officers licensed in 22 states, and we can do business purpose DSCR loans like we love to do in 44 states. So go ahead and visit us at themortgagecalculator.com. We can pair you up with one of our loan officer consultants, and we do this show every single weekday at 11 a.m. Eastern time, where we go through the rates and do a deep dive into a different topic every day, like we did with the asset utilization loan. So we hope to see you all tomorrow for the next episode of Daily Mortgage Rates Live with the Mortgage Calculator. Everyone have a great day.
Thanks, everybody.
Thank you, everybody.